Hi, it's Harry. I thought I'd bring everyone up to speed on the recent events from the Bank of Canada and so far the impact on our Calgary real estate market. Well, prior to the inflation data release for the month of February, the Bank of Canada, Tiff Macklin, ended up reducing our overnight rate by a quarter point. And given the data at the time that was available to him, he uh, he ended up reducing it, by, as I said, by a quarter point. But subsequent to that, we've now seen that inflation data has come in for February at 2.6. And we've heard further notices from the Bank of Canada after following this interest rate reduction that said the potential going forward to reduce interest rates further are no longer in the Bank of Canada's control, and it has to be political policy versus monetary policy. Why is he saying that? Well, at 2.6% for February, he's starting to believe that inflation will start to creep up to that 3% level, which will stop him from reducing interest rates further. And Mark Carney, knowing this, our new PM, he has basically tried to reduce inflation by taking off the carbon piece in April, hoping that the Bank of Canada will reduce rates further in April. But I don't think that'll happen because none of that will enter the numbers. But now the inflationary cost of these tariffs is starting to enter our numbers. Because recall, it didn't really start to hit us till March. So we're going to see some inflationary effects. I suspect that the Bank of Canada will keep the rates steady for the mid-April monetary policy. In the interim, our spring market did not go unnoticed. So what ends up happening has been just delayed in the last few weeks. So you haven't seen the March data yet, but I've been tracking it week on week, and I've seen a 6 to 8% increase in the overall market, and specifically in the detached market. So what this means is that the market is in full well. People have decided to get off the fence to some degree. Those that are financially stable have decided to buy. And if you delve deeper into the stuff, it's the higher price items that are moving. I've said this to a few buyers and some of those who follow me online that what's happened is that the over 800,000 market has increased its sales by 10%. So that's why the numbers are skewing upward. Folks that are seeing a buying opportunity that can afford it are buying these higher price homes, whereas those who are somewhat questionable or concerned about the market or concerned about their job prospects have decided to sit on the fence. As I said earlier, if things start to move, you'll be behind the eight ball. So what folks are going to start to realize is that some of this market has already moved on you by about 6 to 8%. It doesn't sound like a lot, but just consider this: for a $500,000 home, that's 30 grand. 39 grand doesn't come along that easily. So that was what most folks that were sitting on the fence are now going to face. There's upward pressure in pricing. The only area of the market that has been stable, and I don't think will fall any further unless we go into this recession, is the apartment condo market. So what I'm saying here is that given that inflation, they're going to try to keep inflation in check, and if we keep interest rates flat, there's still a lot of pent up demand. Our buddy down south has caused a lot of issues. People don't tend to buy big ticket items in times of uncertainty, and businesses don't plan or do major projects in times of uncertainty or hire. So it's going to be a very interesting process. The word stagflation continues to haunt us all, where you have inflationary effects but a stagnant economy. I'm hoping that most of the items for housing construction can be sourced in Canada. Otherwise, we're going to get an inflationary push on housing prices. And if folks are starting to look for greater salaries, that's called wage inflation, and then we'll see another inflationary push. I'm not begrudging people wage increases, but it does push your economy to an inflationary stance. So I expect prices to go up a little bit, because I thought it would stay steady, but the negative effects, we haven't seen any recessionary effects yet, so that has basically pushed prices up. We might back off. I'm still believing that we'll stay level to last year. We're a little bit above as per the spring market. It might back off in the summer. I just don't know. I don't know how inflationary these tariffs will be. I know they will be, but how much, what's the impact is still a bit up in the air. So if you're a buyer, I'd suggest, and you're in a stable position, I suggest you buy. Sellers, in the past I said, sell as fast as you can. I'm still not off that position, because it might steady off, but you'd rather get off your position as opposed to face a downdraft in your pricing. You might see an updraft, but I don't know whether people would push the prices higher if they're concerned about their job or their financial situation. So that's my thought going forward. If you're a buyer, suggest that you take advantage of the opportunity of these lower interest rates. If you're a seller, try to get off your position as soon as you can, if you have to. Otherwise, it might be quite a few year wait, because our friend down south has 3 to 4 years of term, and the turmoil is there. I mean, now we're facing also tariffs from China, so it's negative on our economy. And then we've got inflation, so stagflation is here to stay, in my mind. It's funny how I said we're going to head into a recession about 3 months ago if these things come through. And everyone says, oh, you're being too pessimistic. Well, now even TD Bank is saying we're going to go into a mild recession. Funny how everyone takes an optimistic picture until they don't look at the situation in its totality. And all of a sudden it starts to bite. So it's going to be interesting. Hopefully this is helpful. If you need any real estate help, please reach out. Still selling, still buying. Have a good weekend. Bye now.